the African countries for grains, finance and trade finance particularly, and how to do the transactions becomes one of the biggest challenges in conducting trade, particularly international trade. And why do I say so? One, because you have currency, and currency issues are a challenge. Secondly, because you also have the instruments to do the payment, the clearing, the settlement, either if you are doing a letter of credit or direct bank transfers and things like that, they are an issue. And thirdly, and really big issue, is availability of trade finance for commodity trade. Because the cash you require to carry out commodity trade, if you're doing 10,000 tons, 20,000 tons of grain that you're trading, the money involved, the cash required is quite a lot. And if you do not have a partner or a financial partner with you, or ability to access trade finance, that a lot of times becomes a deal breaker when you had an opportunity to trade, but because of lack of trade finance and proper instruments and can support the transactions, they collapse. Thank you very much.
Interesting. Now, we have seen the problem. Now, coming back to Exim Bank straight, what is the solution to the problems?
Thank you very much. Before coming to this specific question and talking about solution, just brief introduction of Exim Bank. We are Export Credit Agency of Government of India. We are responsible for G2G lines. Whenever Government of India extend any concessional line of credit to the partner country, actually we are doing that. And 42 African countries, including Kenya, are recipient of Government of India's credit line, concessional credit line. It ranges between $9 billion to $10 billion commitment and disbursement to different African countries. And as I mentioned that we are Export Credit Agency of Government of India, our basic objective is to promote India's international trade and investment. For that we have various other products also, other than this G2G, this government to government line, where government of the recipient country would become borrower, and Indian company would be executing that project, and we would be disbursing to Indian entity, Indian company, and a borrower country would be making that repayment over a period of 20-25 years.
That is in case of projects.
That is in case of project. So now, because question was related to trade and associated issues with that. So my friend talked about letter of credit. So where we can support in that, I will talk about that only. If we are importing something from India as an African entity, as an Kenyan entity, and LC, letter of credit, is not accepted by Indian bank because African bank may not be known to all the Indian banks. So we can provide credit enhancement to that instrument. We can give guarantee to that LC. In case of LC devolvement, we will take care of that. We discount that LC as well. So I mean, whenever these kind of LCs are not acceptable in India, we provide solution to that under trade finance. There are other things also. We can also give trade loans to local banks and DFIs, development financial institutions, and they can on-lend it to their borrower. But of course, our loans are tied loans, so they can lend it to those borrowers who are importing something from India, who are doing trade from India. They can lend to those borrowers, or they can on-lend to those borrowers wherever we are lending to local banks.
Interesting aspect. Now, coming back to Africa, I'm sure there are G2G options available. Is there anything because what my view is that down the line, India will be more and more food importer. Okay? Africa will have, if I say considering the ecology, the land mass, the fertility, with minor introduction of proper technology in Africa, Africa can become a food surplus. It's a huge basket. Other countries are stagnating. In this opportunity, I feel India-Africa trade is bound to go up. What are the specific areas which you feel, if this can be done, the trade between India and Africa can become better, or there will be a booster to the trade, and both sides will gain. Indian traders will gain and Africans will gain the markets. Is there any specific which you feel on priority which government of India should look at it?
Thank you very much, and thank you for the question. India-Africa trade, I see lots of opportunity across the value chain. First of all, there is opportunity for technology and know-how transfer. Why is India well placed? Because the technologies made by India for farm level, post-harvest handling, and even value addition by capacity, by size, by price, they very much fit the requirements in the African status. For example, when you look at the dal mills, for example, and that technology transfer leads. And indeed, even we have seen the Indian Exim Bank supporting enterprises in Africa, being able to trade or buy the equipment and the technologies from India. That is one. Secondly, there is opportunity for processed grains, particularly looking at the green peas and green mang and all that, processed into polished and in flour. There is a market both ways. Market for the grain and market for the polished grain from there. Thirdly, and very important, there is also the seasonal opportunity where when India has harvested and they've got surpluses, they are able to export out to Africa. But when they are out of season, they can import from Africa to India. And we have seen that cross-reverse trade happening many times, and it's a very big opportunity. In fact, we are looking at some crops like wheat, where India produces a lot, but it's not selling into the African continent because of sanitary and phytosanitary issues that are yet to be resolved. And that brings me to my last point, that policies needs to be sorted for that India-Africa trade to happen, because the opportunity is there. Thank you very much.
Now this is a message for the organizers. Anybody from the organizers noticing this aspect? That what actually is required in Africa, we don't have sessions. And this is where I think we have to look into it. Because there is a huge opportunity for Indian technology suppliers, input suppliers, processors to work in collaboration, and we are not discussing in these 2-3 days, which is sad. So we have to look into these aspects so that when you are planning the next edition, maybe Grain Council can be a very good knowledge partner to work on. Now, coming to Chandrasekhar sir. Today we are suffering as a country from currency devaluation on one aspect. Imports are becoming a liability in one way, because more and more imports means more currency devaluation, more our trade deficit challenges. What should be done between India and Africa so that we reduce the dependency on dollar and make local currency trade opportunity, so that both sides traders are having a natural hedge against the devaluation and benefit and improve the trade partnerships?
Excellent, great question. Very important in this juncture. One, you started your comments by your initial remark by saying you are expecting India's imports to keep increasing, particularly agribusiness. I completely agree with you. How much, which crop, what extent is a matter of debate, matter of opinion, but overall, India's imports will continue to expand. There is no doubt at all. That's number one. Number two, Africa could be a logical origin. And when we say Africa, Africa is a continent with 54 countries. And therefore, there are 54 challenges and 54 opportunities. Therefore, we need to tailor-make our response to each one of the partner countries in Africa. I believe if the policymakers in India realize that our import dependency is going to increase, we need to extend lines of credit to some of the key African nations. For example, Mozambique, Tanzania, wherever we are importing pulses, we are importing cotton, and then we are importing raw cashew. If we are able to extend lines of credit on the lines of, I don't know how many of you know US GSM 101, 102, 103. They have a credit facility. If we are able to follow that pattern and extend lines of credit, that will strengthen our relationship. Number one. Number two, I'm also thinking there are companies in India, and I'm associated with some of them. There are companies in India which would be willing, which are willing to actually fund Africa's exports to India. These companies would even be ready to pay 60, 70, 75% money, the value of the cargo in advance to African exporters, subject to 1, 2, 3 terms and conditions, etc. And therefore, that kind of a finance is also possible. The third one, I believe, while finance is extraordinarily important, we need to also go beyond finance to engage with many African countries in terms of joint research, technology exchange, investment, etc., which will boost the strength of our relationship. And therefore, there are multiple ways in which trade finance and lines of credit can be strengthened. Number two, insurance. Insurance is a key and a critical factor in these current times of geopolitical uncertainty, and particularly within Africa, because several countries here are landlocked. Their logistics costs are far higher than India's import from other origins. And therefore, that is a second aspect that needs to be looked at. And the African nations also must be keen, clear, and committed to improving their logistics and supply chain networks. And therefore, I think this is a strong opportunity for partnership in multiple sectors and in multiple dimensions.
Thank you, sir. Sanjay, very simple question. How to improve the financial aspects between Africa and India to boost that?
I think this is the most question that is staring us since last many years, and the system has been funding the trader but not the trade, because it is very risky to fund the trade. For the trade to be funded, there has to be an ecosystem like what we have developed in India. India has a WDRA, a authority which not only regulates the exchange but also regulates the people who come on the exchange, including the regulators themselves, as well as the buyers and the testing agencies, everybody. So the bankers have confidence. Such kind of system is available in Africa only in Kenya. So Kenya has the negotiated warehousing system, others don't have. To some extent it's there in Tanzania and Uganda. Even South Africa doesn't have, which has otherwise a very well developed financial system. Egypt has a very well developed financial system, but doesn't have the negotiable trade, warehousing receipts. So only these three countries have it, and all three countries are neighboring here. So still the warehousing receipts are not traded the way it is traded in India, because India is one of the best in the world. So unless we do that, the the trade finance will show up in the figures that okay, we have so much of trade finance, but it is not being funded. It is being funded in the name of trade finance to the traders based on their balance sheet. As Gerald has been telling, Gerald is my old friend here. I have been in Kenya, I lived here, so we interacted quite a lot in the past on similar issues. So what we realize is that unless you ensure that the bankers or the bank does not have the middle office, it will not happen. What do I mean by the middle office? Like traders knows best how to manage the risk of price, and bankers have no clue whatsoever. So if they don't have that, they try to bring some managers within the bank. It doesn't work because they cannot work at the fast pace at which the traders work. So what happens when there is a default? They repossess the goods because the lien is marked as per the Warehousing Receipt Act. So they take the goods. So they have given funding up to maybe 60% of the goods, and when they go and try to sell this commodity, they don't even get 40%. So that means the system collapses. So for them to have this kind of an agility and ability to both assess how much is at risk, that part they can outsource. Like in India, what we do? We do the outsourcing of commodity to an institution like Star Agri is here. Amit is here, so he will speak after me. So they ensure that it is properly stored, and when it's stored, they give the confidence to the bank that yes, I have the key and I am sleeping with the key under my pillow in the night, so you can be rest assured that the goods will not go anywhere. But what if the goods quality goes down sitting in the warehouse itself? If it is eaten by the rodents, so all that quality assurance is given by some sort of a warehousing and a provider of the services which provides an assurance to the bank. So if there was a middle office within the bank which they can outsource and they can take care of the price risk, because even Star Agri may not be able to provide the kind of price risk which I'm sure you do or you don't know, I don't know to that extent, but usually such agencies who have that kind of an ability to whom the bank should outsource the services. So once you have this entire ecosystem which is already developed in India, if you develop it here, then the trader will have the money for the trade. Otherwise, only the rich traders will have the money. But the genuine traders who have a very valid transaction since last 20 years, they will not get the money.
Amitji, you have heard the concerns of Grain Council of Africa. Mr. Gerald mentioned some of the issues there. You are custodian of commodities as a very important logistics partner between buyer and seller. What should be done to bring the confidence on the both sides from the financial point of view? Because we are discussing finance. The whole issue is crisis of confidence. Nobody is bothered about quality if the finance is at stake. So everything is finance end of the day. What should be done so that trade between India and Africa becomes more comfortable, less risky, considering all those dimensions, insurance issues, currency devaluation, financing, and all those aspects. Pure as a business, no Gyana, just as a businessman, यार ये कर दो काम बढ़िया हो जाए, पर ये नहीं है इसलिए हम लोग रिस्क नहीं लेना चाहते हैं. वी आर कॉशियस एज ए बिजनेस कम्युनिटी. I was just asking him that I just want his experience because he is well-known warehouse management company in India and they have a whole lot of dimensions of business. My single point is, what should be done between India and Africa and as a channel partner, which is a key warehousing management company, what should be done so that both sides of trade feel comfortable and they want to do business without having too much concerns on who will do insurance, what will happen to the currency, whether money will be protected or not, whether there will be pilferage, whether there will be defaults. Leave all that out. Only then we can grow business faster. What should be done to build that confidence? That's my question to my friend Amit.
Yeah, good evening and thank you, Lily. So, hi friends, Amit Bansal this side from Star Agri. I'm heading supply chain for my company, and Star Agri is the well-known, you can say, company who is entire agri value chain from pre to post. So we are handling everything. It's neither operations, financing. We have 4-5 companies under the name of Star Agri. So we are our main parent company is the Star Agri Warehousing. So as Lizzie has told, we are the leading private warehousing company who is handling around 5 to 6 million tons of the agri commodities under their umbrella any point of the time throughout the year. We are doing financing through. We are a well-known collateral manager for the banks. Right now, more than 25 banks we are empaneled in India. So worth of commodities in totality more than $2 billion. Anytime in INR it's more than 50,000 crores we are handling our in name of Star Agri. So we has asked 4-5 things altogether. So one by one which I can cover and as per my knowledge. So first of all from Africa point of view, because we are in Kenya and we as a Star Agri are also in Africa from last 3 years. Our branches are in Tanzania, Uganda, Zambia and Nigeria. And now we are in Kenya, so next time we will add 5th one. So as per our experience, so what we are proposing to localites, last week I met in Tanzania with one of the leading bank officials. So they are doing collateral funding in a big way. $millions of dollars they are spending on them. They are investing on them. But their commodities are metals, sulfur and this tobacco. They are doing a big volume, but none of the agri commodities because they don't have the expertise. So I propose them that there is a lot of, because as per our knowledge, many of the African countries, their governments are proposing for the local productions. So because to obviously job creation, wealth creation. So as the processing will come, the processor need the raw material throughout the year. So that is the best way of this as a collateral manager. We propose them and they readily ask, Amit, give us the proposal, within a 7 days we will give you a sanction and we will empanel you as a collateral manager. They were more than happy because as per our expertise from last 20 years, so I give them the entire value chain, how we are managing quantity and quality to ensure their risk. Price fluctuation is a little bit, so according to the commodity, we keep the margin with these banks so that that M2M can be managed. And majorly their existing clients, they have other collaterals with them. So I think CM funding, as Sanjay is also approached about this. So most probably in next 15 days we will start CM funding with the Tanzania. Nigeria we have already started. Last 6 months, before 6 months, there is some FCMB bank who has started with us. Our WR funding has already started. So from Africa point of view, all these countries, this is a good opportunity for the warehousing collateral management funding. So like Star Agri, we are proposing, we are meeting with the banks and they are very keen to start with. So that is the one aspect from the local perspective. So another thing which we are proposing as Mr. Esther asked, so I requested to all the sitting, please, Suvirji and team, please ask them to just keep quiet now.
अरे भाई जरा शांति बनाए रखिए.
I request him, please.
अगर बहुत इमरजेंसी काम है तो आप साइड वाले कमरे में चले जाओ, प्लीज.
Thank you. And second thing, for India and Africa point of view, we are proposing one more thing to our Indian buyers and suppliers from these African countries. The big opportunity is that because obviously there is a fund requirement to any of the buyers. So we are proposing to our Indian buyers, counterparties, that you bought the material from African suppliers, we will keep in our godowns to give the comfort to both entities. Just try to understand if supplier from the Africa has put the goods in our custody in any of the African countries, then if we assure to Indian buyers, so he can make the payment to suppliers. Because otherwise supplier has to ship the material till the Indian port. Once received, then Indian buyer will make the payment, because both sides comfort is required. As sir has asked that comfort, because obviously there is a disconnect, anybody can default. It's human nature. So if as a custodian of the goods I assure to the buyer, then buyer obviously make the payment of supplier. So there is a, because from any of the West African countries, entire cycle is a 45 to 60 days. From sourcing to material reach to Indian port. From East Africa, it's 30 to 40 days. So as liquidity will increase, more trade will happen. So that is the another way where both countries can take it together, and we are there to. Only thing is required, because as a warehousing service provider we are there, but local banks will help as a CM. So then it will enhance more and more volumes. That is the second way. Third thing, as if directly which we are proposing, it's structured trade finance. So it's we are not new to this market. From last many years, lot of European banks, Dubai clients, Singapore clients already doing this the same thing. Only thing which we as a Star has made some changes in that, because any of the other entities who are making the trade finance like BL discounting or any of the transit funding, but they need fund once the material reach to the port, because they don't have the entity or they don't want to take any exposure. So they want money as the material reach before 4-5 days they need the money. So, but buyer anytime, if any processor in India of the suppose cashew factory, he has bought 1,000 ton, but his daily crushing is 20 ton, 50 ton, he can't make the payment of 1,000 ton altogether. So as a Star, because we are a warehousing service provider in India, so we are giving the end-to-end solution. Users ship the material, will make the payment to the supplier, we will clear the cargo, we will keep the stock in our warehouse in India. So we are giving one extended arm to them. So as and when they require, piecemeal releases can be happen, 50 ton, 100 ton, whatever as per their processing, they can take from Star Agri. So this is additional thing which we are proposing to our clients. So as a Africa point of view, to number one, collateral management services, Nigeria already started, Tanzania also next 15 days we will start. So this can be scalable. Second thing, this structured trade finance which we are doing lot and in not only main core commodities, we are exploring right now. Raw cashew we have started, pulse is already doing, oilseed we are already doing. I hope next 6 months cotton will be added. So lot of opportunities are there, spices are there. So these are high value commodities. So I think from all these products we can bridge the gap of Africa and India to do more and more business. So I think these are the things which I have to.
Very important, Abhijit, what you have mentioned. Now I will come back to the Exim Bank issue here. We have seen that how the Indian Collateral Agency and warehousing companies are operating both sides, Africa, India, and they are willing to set up base here also. And there are certain challenges because banks are not doing financing, and that is creating a liquidity challenge. In this case, when an Indian company investing in Africa, and Government of India is also willing to extend credit lines, plus also to improve the bilateral relation between two sides, how Indian company like Star Agri, with the expertise of finance management and cross-border financing, which is Exim Bank, can work together and find out a model. Because when you will talk to local banks and G2G arrangement, maybe there will be more comfort to endorse business models of Agri, Star Agri. Obviously, within the given guarantee, warranty, concerns and everything. I'm not saying blanket. But at least there will be some better comfort zone so that they start extending their businesses here, which benefits Indian trade. People can buy and stock it here, and then material can go on that side. And then on the other side, our African friends are also willing to have a better relation. Plus, there are a lot of technology transfer issues which Grain Council has mentioned. So, starting with trade, but then moving into how we can source technology, equipment, projects back into Africa. And this becomes a very strong loop, India-Africa loop. Is there any way where this can be a tripartite arrangement to work out an action plan so that this arrangement can become more powerful.
Thank you very much. Before coming to this question, you were talking about sort of de-dollarization. One point I wanted to mention at that point of time that Government of India has started extending G2G line in Indian rupees also.
Very good.
So, means in that case, what happens that in USD line also, we are disbursing the money to Indian exporter, whether project exporter or commodity exporter or service exporter. We are disbursing in dollar because we are debiting the account of partner country in dollar. So now we have started extending line of credit in Indian rupees, and we would be in any way Indian exporter is fine with Indian rupees. But the only thing is whether borrower is accepting that Indian rupees or not. In more cases now, borrower is okay with Indian rupees because considering that rupee is a depreciating currency, so these loans are for 20-25 years, and they will end up maybe paying little less what they were paying overall. In terms of interest, it might be little higher, but in terms of total outgo, it may be less. So that was another point.
The average depreciation is 3.5%.
Right. So the rate of interest between dollar and rupee difference is less than that. So overall they would be at benefit. Now coming back to India's overseas investment, if I say in banking terms what you were asking. In case Indian entity is investing in Africa, in Kenya, in other African countries, we can support to that investment. We can give a loan to Indian entity for putting as debt in their maybe subsidiary. They can also put that money as equity in that subsidiary. We can directly support to overseas venture, overseas subsidiary. That entity may be our borrower. And if Indian companies, they are forming JV, then we can support to that joint venture also in overseas territory. So means we are taking
in JV. Is there any shareholding restrictions?
Shareholding restriction. 2 points. One is that if that is more than 51%,
is a comfort zone.
Then there is no issue. We can support to that extent. If it is less than 51%, then we can support to the extent of Indian equity.
Very interesting. Last point to my friend again, Gerard. You have seen that there are options available. There are warehousing companies willing to work with your organizations or your members. Exim Bank is existing here, and there are bilateral arrangements between G2G arrangements are there. Private players are also invited to participate in this whole new development. Any specific area, if I say 1, 2, 3, pressing point which you feel Indian companies and Government of India must immediately look into these 3 aspects so that Africa-India trade can boost?
Yeah, thank you very much. I think of a few, and since we are discussing commodity, one of them is a partnership between the Indian government and the governments in the African continent when it comes to matters commodity. And here I'm talking about, first of all, warehouses and warehouse receipting, like what Star AGRI are doing. And we have an opportunity where we can harmonize between the Indian government regulations and standards on commodities on one hand, and also in the African countries, and even create an interoperability of a warehouse receipt, so that an Indian enterprise can purchase commodity in form of a warehouse receipt in an African country. And here among us, we have the CEO of the Tanzania Warehouse Receipt Regulatory Board here with us, and the Kenya warehouse receipt systems exist. You've got the exchanges. So that is one opportunity where we can have that visibility that a buyer in India can see what is in a warehouse in a country in Africa, and there can be systems that can make that possible to purchase and trade it across. That's one. But secondly, the issue of finance and also the platforms to work together And us at AGC, we have the GSOCO trading platform where we do linkages between buyers and sellers. And so if we created handshakes between these commodity platforms to be able to work together in the Indian continent and in Africa, we would open a lot of opportunity for trade transactions. Thank you.
Thank you so much, Gerald. I think this was a very concrete takeaway for this session, that where is the way forward. Amit, don't you think it's a business opportunity? AV system, why mics are going blank?
No, definitely, we are also working on that aspects. That goods, same thing I told. The goods stored in our warehouse in Africa, and Indian buyers enjoy that facility. So same thing he is proposing. We are already working on that.
Fantastic.
Only thing is how local banks will fund, or our receipts Indian bank will fund. So that liquidity problem should not be there, and because goods in our custody, so everybody is in comfort zone. Either Indian buyer, Indian banks, local banks. So only thing we are just channelize the things.
So this is second session for organizers. So first, which we discussed, that there has to be a. What's happening to Mike? So where are the organizers, event organizers, program finalizers?
I think it's fine now.
Sir, first session was on technology and second on financing aspects for warehousing. Keep these two sessions and have a bilateral workshops and resolve so that every TASO event should have an end of the day signing ceremony of MOUs between parties. That is the way forward. I think we should look from that angle. Otherwise, we keep talking and end of the day, if there is no end product to take home, then it has no meaning. So thank you very much to all the fellow panelists. It was a great opportunity, and thanks to Gerald for sharing, and thanks to Exim Bank for putting that what already exists, and Amit from there to take off and build it a business model. And thanks to Chandrasekhar ji and Sanjay for highlighting the other aspects which we have to focus on. So thank you very much. It was a great learning session, and I hope next time there should be MOU end of the session.
Thank you.
Thanks to all the viewers, and back to organizers.
Thank you so much. Thank you so much to our moderator and our panelists for taking us through the conversation on banking, trade, finance, and insurance. We totally appreciate you, and we'd like at this particular moment to give you a token of appreciation. What do you think, Jamal?
Absolutely. We think we should definitely give them a token of appreciation for their time and the efforts discussing the same. And I think that last suggestion will be implemented on the 5th occasion of the AFRO World Agri-Food International. Thank you, ladies and gentlemen. Once again, a round of applause for our panelists for this session.
Thank you so much. And to give them the token of appreciation, allow me to call on stage Mr. George Omuga, who is the Managing Director, East African Tea Trade Association. Welcome to the stage.
Also, Moshi, please join us on the stage.
Great. Mr. Moshi, welcome on stage. Mr. George Omuga, welcome on stage as well. We are so honored to have you appreciate our panelists for this second panel conversation on our very first day of AFRO World Agri-Food International 2026. I'm going to call upon our cameraman to move closer and get the pictures as we appreciate our second panelist. You can move to the front, move slightly closer.
Yes, come forward as
Come forward.
we will now give out your tokens of appreciation after the photo as well.
All right, so we'll start. Go ahead and award each of them.
Yes, once again, we'll give a round of applause to Mr. Sanjay Sethi, Mr. G. Chandra Shekhar as well, Mr. Amit Bansal. Thank you so much for your time, Mr. Ankush Jain, Mr. Astitva Bharadwaj, Mr. Sanjay Lamba, Mr. Om Prakash Maheshwari, and of course, our moderator for this particular panel discussion, signed with an MOU, Mr. Vijay Sardhan. Ladies and gentlemen, another round of applause for this panel, number 2 in the AFRO World Agri-Food International. Did you learn something there? Valletta, in this particular panel?
Absolutely, so much to learn. We need to unlock a lot when it comes to financing agriculture in Africa, and having that conversation is a step in the right direction. So thank you so very much to our experts and our moderator for facilitating such an integral conversation on banking, trade, finance and insurance.
Now there's one particular voice and man that we did not announce on the panel, and that is Mr. Gerald Masila, who's also going to be appreciated for his time and his discussion. Thank you so much for being on this panel as well. I think it's very insightful to see which direction we're going with, but at the end of the day, after a panel like this, we need to put pen to paper.
All right, thank you. Mr. Gerald? Very good. Okay, Mr. Gerald, please move to the front so that you can get your token of appreciation as well. Here it is. All right, there you go. Cameraman, make sure you capture the moment as we appreciate our panelists who have taken us through a fantastic conversation on unlocking finance in agriculture here in Africa. Any person left? Yes? Yes, move to the front so that you can get your appreciation. Thank you so much. We appreciate your time on this panel conversation this afternoon. Thank you so much for being with us. And also thank you so much, Mr. George and Moshi, for being here to appreciate our panelists. Can you take one group photo all together? Let us move to the front with our awards, and then we're going to take one group photo. Feel free to smile. Smile harder. Thank you so much. Thank you so much. And after that, you can make your way out of the stage. Thank you so much to every single one of you.
Well, what a fantastic day so far. We've done the inauguration. We've had our first two panelists. We've still got day 2 and day 3 to go ahead. So we're looking forward to our last and final session for today. And what are we going to be discussing?
All right, so we do have one more panel conversation this afternoon, and the focus will be